Fed Chair Jerome Powell told reporters this morning that he's looking at hiking interest rates again. Let's watch.
It is the Fed's job to bring inflation down to our 2% goal, and we will do so. We have tightened policy significantly over the past year. Although inflation has moved down from its peak, a welcome development, it remains too high. We are prepared to raise rates further if appropriate and intend to hold policy at a restrictive level until we are confident that inflation is moving sustainably down toward our objective. We are attentive to signs that the economy may not be cooling as expected. So far this year, GDP growth has come in above expectations and above its longer-run trend, and recent readings on consumer spending have been especially robust. In addition, after decelerating sharply over the past 18 months, the housing sector is showing signs of picking back up. Additional evidence of persistently above-trend growth could put further progress on inflation at risk and could warrant further tightening of monetary policy.
So interest rate hikes just make life more difficult for working people, for small businesses, for people who are first-time home buyers, people who are living in areas where there hasn't been a lot of economic growth in recent years. What they do is they make life easier as well for those who are big corporations and who have investments in large corporations. If you are a huge multinational corporation, you're not going to rely on loans to grow your business. You're not going to rely on loans to start your business. You are, however, going to say, well, working people have a little bit too much power right now. We want there to be less jobs. So it's great. There's less jobs for people to take in small businesses, in small town areas, because there's not small businesses being started or invested in. Therefore, there are less jobs available. Therefore, these working people have no choice but to take a job at a fairly low wage at a really large and established company that's doing fine despite the Fed trying to slow economic growth. It's a really bad situation for most Americans, and it benefits very few people, the people who reap the profits from these multinational corporations. And so raising interest rates is not something that's going to quell inflation either, because we know that this is supply side inflation. We talked about this a little bit earlier in the show, but we know that at the beginning of the pandemic, we had this problem of supply chain disruptions that led to many companies increasing prices to cover those input costs that they lost because of problems of not being able to get semiconductors or having warehouse workers spaced out and a decrease in input. And then we had so many other companies join in and raise prices. We're in an inflationary period because of corporate greed. The solution is not interest rate hikes. The solution is to make sure that our largest corporations cannot price gouge. The solution is to break up the huge monopolies that we have that have price setting power and the oligopolies in the country. The Fed, using this one tool of adjusting interest rates, is just not producing good economic outcomes for anyone in the United States but the ultra wealthy. And it's a really sad state of affairs that this is pretty well known and agreed upon by economists, and they're still doing it.
No, look, I think you're right. I mean, what you're going to see for the average layperson is a reduction in income, a reduction in buying power. The price of goods will continue to increase. And then they keep making this argument, all of these jobs are out there. Everybody can get a job. Yeah, you can get a job, but the wages aren't increasing on the job. And then it's going to cost more to even pay for things. It's going to cost more to pay for your rent. It's going to cost more to put down to purchase a home. I mean, everything is rising, Jess, while they're also saying, but everybody can make it because we just added 400,000 new jobs. It's as if these people think the American people are stupid. I think Jerome Powell needs to send a clear signal to the American people. What is the long-term strategy here? Every 2 or 3 quarters, we're coming back saying, oh, everything is improving, but we're going to raise interest rates some more. Everything is improving. The jobs are better. Consumer confidence is there. Consumer spending is there. And yet we're going to continue to hike up rates and screw people. So you're doing better, but we're going to keep screwing you anyway. They need to be clear on what is the ultimate end goal here for the American people so that people have confidence about their future. You can't plan, Jess, in this type of an unpredictable market.
Yeah, for Jerome Powell to think that decreasing the amount of jobs available is the solution, it just doesn't make any sense. When you see corporations raking in record profits, you need to say, okay, so you can afford to increase wages to retain workers. We've seen wages remain stagnant since 1970. If the labor market is hot and workers have negotiating power, that will bring the economy back into balance. Actually, CEO pay being 400 times the average worker at a company suggests that the amount of money they're raking in profit is going to executive pay, and it's going to shareholders, and it should be going to the workers using their own two hands to either get the product or service to market or to produce it in the first place. That's where a majority of the money should be going anyway. That's not going into input costs. It should not be going to the executives, board, and shareholders. It's ridiculous that they think that it's their responsibility to step in and keep wages low for the convenience of America's biggest companies. But they do it time and time again because that's who donates to their campaigns. So it's kind of baked in to the infrastructure of the United States political and economic process and system. And so I think if you're an everyday working person, your only solution is, I guess I have to unionize my workplace and negotiate directly with the boss, because the Fed isn't allowing the market to do what it would naturally do when the market gets hot, which is increase wages and increase benefits so that workers can not only afford to live, but it's worth it for them to work for 8 hours a day for the company that currently is offering wages that are not living wages. This is literally the solution to not only inflation, but also wage stagnation, to let the market do what it does when the labor market gets hot. The Fed stepping in and trying to correct this isn't going to make the economy better.
I mean, the Fed is literally manipulating wages. I mean, that's literally what he's doing. I mean, I hate to, launch such an attack against Jerome Powell. I'm sure some people may say he's a fine gentleman. But to your point, we know that many corporations, the profits are booming. They're making a lot of money. And look, I am pro-capitalist. I'm all for CEOs making money if they're leading the country properly. Give them more stocks. I'm all for the board making more if they're making sound decisions for a publicly traded company. But I'm also for the workers that are helping to create these products making a profit also. I'm not okay with a company making $100 billion, and yet Joe Schmo out there is working 80 hours a week to provide for his wife and his children, to pay a mortgage, to pay for car notes, to pay for car insurance, to eventually put those kids through college. And he can't do any of that without getting loans and then finding himself in debt, never being able to pay it off for the duration of his life. I don't know how any sound person can think that that's a reasonable decision to make, whether you're a Republican or a Democrat. Again, I'm for profits, but let's share it with the hardworking people of this country, because too many people are struggling over and over again. That has to come to an end.
Yeah, I think the Federal Reserve taking this approach of raising interest rates is something that we're paying attention to now because we've been in an inflationary period for so long, but it's also a regular policy of the Federal Reserve. It's called the non-accelerating inflationary rate of unemployment. And they think that they need to keep unemployment at a certain level so that wages don't go up so much that there's huge consumer demand, because now people have negotiated for higher wages, more people are working, they have money in their pockets to spend, and then that becomes an inflationary pressure because demand goes up. That policy is debunked by the same economics that they go by. Basic supply and demand. If more people are working, they're producing more. Supply goes up as well. It's not a demand problem. It's an excuse they have for regularly keeping a group of people unemployed in this country so that they can keep wages low. There's no reason to leave productive capacity on the table and not allow all of our real productive resources, including labor, to be put to use so that we can increase the quality of life of people living in this country. They really need Congress to step in and say, okay, if we have supply chain issues and that's leading to price increases, what can we do? What policies can we pass to address some of those supply chain issues? It's up to Congress as well to address inflation. You can't just say it's up to the Fed to reach maximum employment and price stability. That should be a duty of Congress. To outsource that blame to the Fed is absurd, especially when they only have one tool to address it, which is interest rate fluctuation.
Yeah, I mean, look, the Fed doesn't, in my opinion, there aren't really any checks or balances here, Jess. I mean, that's sort of clear, I think, to the average person. Jerome Powell is pretty much doing whatever he wants for special interests and wealthy multinational corporations. Now, is there a positive side one could economically argue to some level of inflation? Sure. But I think we are far beyond that point, and you sort of alluded that in your commentary. We are way beyond that point. And so again, for the average person, if you're talking about, hey, we don't have the ability to produce enough chips, or there's some disruption to supply chain and demand, that was during the COVID pandemic. We've now had, 2-3 years to sort of repair and move beyond that. So then I guess my question is a question that the average person would ask many of our members of Congress. What are you guys doing to then direct some type of change from the position of the chair so that we don't continue to see these 2.5 basis point interest rates hikes? It makes it harder for me to pay off my credit card debt. It makes it harder for me, again, to pay for basic necessities. These are questions that our members of Congress just simply aren't asking. And I guess you have to ask yourself why. But then again, as you stated, if someone's giving me $1 million to my PAC to run for re-election in 2, 4, 6 years, am I going to say anything? Probably not, even if it's at the expense of the very own constituents that sent me to Washington to represent them.
I think it would be very interesting if we had a kind of accountability built into our economic and political system where we said, let's look at your balance sheets. Let's see how much revenue you brought in. Let's see how much of your profits went to your shareholders, how much went to your executives, and how much went to your workers, how much went to research and development. It's not beneficial to the consumers or the workers if all of that money is going to executive pay. That's just leading to the concentration of wealth in the hands of the people who hold the keys to the accounts at America's largest corporations. The shareholders, too, have a pretty siloed interest of having the biggest return from their investment. And so who's investing actually in having a functioning economy where people get what they want and need and can meet their material wants and needs? Currently, the way the system's operating, there's no way we can regulate what's going on. Congress is not willing to do it. The workers don't have the power to make these decisions. And so we have this runaway situation where the wealthiest in our country have more wealth, the top 1%, than the middle 60% of the country. That is absolutely insane. Our economic system is not working for the benefit of most people. And it's time that more people have a say in how the distribution of just profit happens in America's biggest corporations. It should be considered unethical for them to increase prices on consumers when they are experiencing record profits.
And it's exactly why Anthony Oliver's song, Richmond, North of Richmond, resonates with so many Americans, regardless of their ethnic breakdown. More Rising after this.